Hey guys, what's up? Shane here from AwakeFX. Welcome to this trading video. Today is the 12th of May 2023. I'm going to show you Shane's trade of the day that I took today on the Eurodollar, the 6E futures market. It was a nice little trade that lined up today, Friday morning, in the UK Open. So I'll show you the trade, the entry, the exit, and then if you want to see more videos like this, more educational videos, please like and subscribe to the channel and maybe leave a comment below of your thoughts. So let's have a look at the trade. Right guys, so we're looking at the chart here of the 6E futures market. That's the Eurodollar. And I just went into bar replay mode so I can kind of play back what I was seeing in real time and how I took the trade this morning. What I first saw here on the chart here, this is a 15-minute chart by the way, is that we had these highs over here on the left. So the first thing I was doing, I was marking up my buy side and my sell side. And I have videos on my YouTube channel will explain exactly how to do this, how market structure works. So make sure to check out the other educational videos that I do have here for you guys. So I marked up the buy side here above this level. Why? Because after the swing move down, there would be a lot of buy stop orders above this area from the previous day. So I marked it up as my buy side level. Then I marked up my sell side level. So where is potential draw of liquidity below the market? So I call that sell side. So I pop that down here at the swing low there. Sometimes I add up two sell side zones. So where else would there be kind of a swing low, a significant swing low that price may want to travel to on a short here? And I identified this area over here. See this swing low? It'll move up. Price moved up and away, so there could be a lot of stops under there. So another buy side area would be maybe up in these highs here. But time of the day there where we're looking at in these yellow boxes is 2 a.m. to 5 a.m. New York time. So in Ireland, that's 7 a.m. to 10 a.m. Ireland or UK time. So this is exactly when I want to be looking for trades in this yellow box. And I'm going to do a video on time and price is one of my next videos that I'll be releasing. So I'll be discussing exactly the importance of time and price when you're taking trades. Looking at this, I had my buy side marked up. Price moved up into that area and rejected, which was cool. On the 15-minute chart here also, I marked up a fair value gap that I saw here between this candle's low and this candle's high. So you see between this candle's low and this candle's high, there's a gap there. So price did move up into it at this point, moved away, but it hasn't kind of completely filled that gap. So I was kind of monitoring this as well. Then zoom down to a 5-minute chart, kind of watching price move up into this area. Time of the day, what was it? 7:25 a.m. So I was kind of monitoring the 1-minute chart here. We're just going to play forward the price action, kind of what was happening here. So I was monitoring this, and then I saw this break of this high on the 1 minute. Let's zoom in there. These are the juicy trades, folks. These are the juicy ones, so pay attention. So this high was broken here, right? So you don't take a trade. You still wait. You wait to see some kind of structural shift. You know, you can see in the 1-minute chart, we have kind of a series of higher highs, higher lows. See that? So I'm kind of monitoring this type of thing. We move forward. And then, okay, nothing to do. What shall I do? Just keep waiting until we see something obvious. Oh, another break of high there. So our structure is kind of continuing there on the 1 minute. High, low, higher, high. And then what happens? Go a bit higher. Kind of meandering here a bit. But at that point there, we break this 1 minute structure. You see, we take out this low over here on the left. So this low is taken out. So this is getting my attention now for a potential short. And then we have this candle here. Bang, proper move down below this low, a move back up. And then on the 1 minute chart here, if you look closely, we have a fair value gap between this swing low, this swing high. You can see that fair value gap. And I do speak about fair value gaps in my other videos. So check out the other videos on my site where I talk about fair value gaps in detail. So between this low and this high, I see price rejected that. So at this point, I'm like, okay, I'm ready to take a short here. I didn't take it at this point. That candle looked a bit bullish for me. So I waited a little bit more. Then price came down here and then I went short. Okay, so I went short here. So I mark up my risk reward tool. short. I was short at 1.0951 with a 10 pip stop all the way up there. I was happy to have a 10 pip stop on that one. Now you're probably looking at that as if you're a trader already and you're thinking, wow, that's a big stop. Would you not just put it above these highs? The answer is no, because price could make a new high here. But I always use a 10 pip stop on my euro dollar trades at the beginning. And then I may move it as price moves lower, then I may move my stop at a later point. So I'm happy with a 10 pip stop there. Like if you zoom out, let's say back to the 15-minute chart, you know, look how far away we are from potential targets down below. You know, the risk reward in this is quite large. I could get like maybe a 2-hour trade approximately down here. And then all the way down here would be something like 2.85. So I was happy with the 10 pip stop up here. And I wanted it above this kind of area. So back down to, let's say, the 5-minute. And then what happened? Move forward. Oh, price took out the high. Okay, so I'm in drawdown here. Okay, if you had your stop above this high, game over. You're out of the trade. And some of the best trades are when highs are kind of taken out again. Okay, it takes out them people who might have went to short a little bit earlier, put their stops above the high. Price starts moving back down again. And then we move down, we break low here. Price is still kind of meandering. Then we get this move down. And boom, we're off and away. And I exit the trade down here. So I was in at 1.0951 and I exited at 1.0931. So I took 20 pips out of the trade with a 10 pip stop. So that worked out really, really well there this morning. So entry, stop, exit. So probably learning here, guys, is that don't put your stop too close above highs with this kind of European setup in the morning. Give yourself a little bit of room for it to make an extra high. And then you'll see that you could have a lot more success in your trades. But this was a beautiful little setup. For me, I see it being very clear. I'm not too sure if you're seeing this for the first time, whether that's clear or not. I'll just show you as well here the actual trade. So here you can see I went short 6E M3. My average sell was the 1.0951. Got out at 1.0931, 20 pips on the trade. And it netted, you can see in the top left there, $1,438. So hope that was interesting, guys. Thanks for watching. If you're interested in seeing more videos like this, make sure to comment down below and subscribe to the channel. If you're interested in trading, ICT concepts, and at a future point, I'll be doing some live streams too. So thanks for watching and goodbye. Have a great weekend.